We are going to be moving on to day 6 of our boot camp. We started with day 1, moved all the way up to day 5, and each day we have been progressing upwards. Now, we started with our foundation, talking about what is the stock market, what are stocks, what are shares, why are people trading the stock market, why are we day trading, what are the perks of day trading, what are emotions we have to avoid, why do people win, how do people lose, right? We've gone over a lot of different strategies. We've talked about many different things, and now progressing on to actual, stock market technical analysis gets very important. So today we are moving over to candles and candlesticks. Now, candlesticks, guys, what are they? How can they help us? So we're diving right into it. What are candlesticks? Candlestick charts are used by traders to determine possible price movement based on past patterns. Candlesticks are useful when trading as they show 4 price points: the open, the close, the high, and the low throughout the period of time the trader specifies. Many algorithms are based on the stock price or based on the same price information shown in candlestick charts. Trading is often dictated by emotion, which can be read in candlestick charts. So, guys, candlesticks are what you want to learn. There are different types of charts, but candlesticks are going to be the most popular. And since they are the most popular, they're also going to have the most strength. And what I mean most strength is that they have the most predictability. These candlestick patterns that I'm going to be teaching you today, these candlestick patterns that I am going to be showing you today, lead to a lot of success in my trading. And if you guys can master these candlestick patterns, you guys are going to be able to call out plays left and right without even realizing. There's sometimes, I'll see a possible candlestick, something that'll set itself up, and I'll say, hey, watch this stock. It's about to reverse. And it starts reversing. And if someone may ask, oh, how do you know that was about to reverse? And just, oh, I just studied this candlestick. It becomes second nature to you. And candlesticks is what I use. So when we're looking at, my scanners and, what I'm streaming, I'm using candlesticks. Now, there are different types of graphing that you guys can use. You can use line or bar, but candlesticks are the most popular, and they're also very easy to read. Right? So what does a candlestick look like? You guys have seen these probably a million times, but let's go over and dive into the detail behind a candlestick now that we know what they are. So these are candlesticks. We have our upper shadow, we have our real body, and our lower shadow. We have our high, we have the close, we have the open, and we have the low. Now, when we're looking at a candlestick, I'm going to drag my mouse over right here. It's very simple to know. Green means what? That the stock is moving up. Red means what? That the stock is moving down. Even if you're the most beginner, most basic, stock trader in the world, we probably, understand that sense. Green means up, red means down. Green means profit, red means loss. Now, these candlesticks, when we have them, they do mean certain things. Now, we have to break down the candlestick into 3 different parts first off. First off, we have the upper shadow. The upper shadow, guys, is going to be the high. All right, that's going to be the high of the candle. Now, when we have a certain spike, let's say these are daily charts. All right, these are daily candles right here. Now, the high, this would be the high of the day. Now, the low down here would be the low of the day. And then this is how do we have, the high or low? Simple enough. Again, where the stock hit a high, where the stock hit a low. Where does the lower shadow or the higher shadow end? Well, this is where the stock opened. This is where the stock closed. So breaking down our 3 main parts, we have our upper shadow, we have the real body, we have the lower shadow. The real body is where the stock opened up and where the stock closed. The upper shadow is where it hit a high sometime throughout that time period. If these are daily candles, well, that's, throughout the whole entire day. For our lower shadow, it's where it would hit on its low. Now, our red is just going to be reversed. We still have our upper shadow. We still have our real body. We still have our lower shadow. These are candle fundamentals. Those aren't going to be changing whatsoever at all. The upper shadow, the real body, the lower shadow. But instead of, again, the open being down low, running up to a close, we now have the open up high and it closed down low. Now, again, let's say what would happen if the stock opened right here and closed up here? Well, then it would just be a green candle. right? So when the open is up high and the close is beneath it, it's a red candle. When the open is down low and the close is above it, it's a green candle. Now you can have an open right here and you can have a massive upper shadow all the way up top, and we can have a high down here, but as long as the stock closes below the open, it is considered what? A red candle. And why would it be a red candle? Because it went negative on the day, right? It lost value. So this is could be a little confusing when you're first seeing it for the first time, but it does get very simple, and it is going to help us, understand, where these stocks have been in the past, because each candle does show us a little piece of history. And this could show us the 1 minute, time frame. This could be the 2 minute, the 3 minute, the 5 minute, the daily time frame of what happened inside this certain time frame inside these candles. Make sure you guys understand these fundamentals, these easy principles about what a candle should look like: an upper shadow, a real body, and a lower shadow. Now there are times we may not have a lower shadow. Let's say the stock doesn't have a lower shadow. Is that okay? Yeah, that's fine. What does that mean though? It means the stock opened up, let's say at the price of $1, and never fell below $1, right? The real body would be the low. So if you don't see a lower shadow, it means the stock opened up at $1 and just climbed throughout the whole entire day. It never went below the open. Let's say the stock never has, a high, an upper shadow right here, right? What does that mean? It means it closed up at its high. So it would just be one big block, it would basically look like, just because it closed off its high. This is where it hits a high and starts coming back on down. Now, you may be getting a little lost when I'm saying what? Time frames, because each one of these candles can represent a new time frame. Because when we look in charts, we are going to either put these in 1 minute, 2 minute, 3 minute, 5 minute daily time frames, depending on what we need to be looking at. So let's understand our time frames a little bit better and how these candles can help us understand what's going on within these time frames. So first things first, let's break this down and let's talk about time frames. Now, I get this question a ton, and I probably get it, 3-4 times a week, where someone says, hey, how do I know what time frame to be in when I'm looking at my chart? Well, first things first, guys, we always want a daily chart and an intraday chart. You should always be having two different charts up at the same time. One that's going over what's actually going on in the day, and one that's showing you guys what's happening in the past. Okay? So we always want to have at least a 1 minute time frame and a daily chart going at the same time. Now, as the day progresses, we move that 1 minute time frame to a 2 minute, to a 3 minute, to a 5 minute. So we always want to see the start of the day in the most detail possible. Patterns will change with different time frames. Be in the right time frame at all times. So it's very important that we are inside the right time frame, because this is going to give us the best understanding. And what have I talked about in the previous lessons? In the previous lessons that I've been going over, I've talked about a lot of psychology. Already I've talked about psychology and understanding the way other people are going to think. Because stocks climb for what reason? Stocks climb because people buy them, right? So stocks are going to climb because people are buying plays. Stocks fall because people are selling these plays. So if we are not in the correct time frame where the majority of people are in, we may see a pattern. Let's say that if 90% of people are in on the right time frame and they're saying, oh wow, the stock's going to break out soon, but you're in the wrong time frame and you're seeing a pattern that's completely different, saying, oh wow, this thing is going to dump soon. You might be selling or shorting while the majority of people are about to buy, and that's where you get really trapped. That's where you're hoping the stock falls and all of a sudden everyone buys on up because they're looking at a different pattern. They're looking at a different setup than you do. All right. So again, we always want a daily chart and an intraday chart. Very important to have both. It's great to see over the past 6 months where that stock has been, where that stock has highs, where that stock has lows. And it's always great to have an intraday chart that shows where that stock has been within today. Now, this was, again, something that was confusing when I was first starting off, saying, how is this chart different than this chart? How is this stock on 1 minute time frame different than this daily time frame? So that was something that really confused me, and I want to make sure that you guys definitely understand it. So first things first, guys, we have our daily chart, right? This is RVLT. So this is understanding our time frames. This is our daily chart, which represents each one of these candles represent the whole entire day. So if we look right here, let's say this was yesterday. This stock had a low point right here. The stock ran up, hit a high point right here, and closed right here, right? We can look at this big time spike. We could see that the stock opened up at this point, had a little bit of a pullback, spiked all the way up here, and then came and closed right here, right? On this red day right next to it. The stock opened up on this red day at the top, spiked up to a high, closed all the way down low right here. At one point, also hit a very nice low. So each one of these candles on the daily time frame, also you could see the D right here for daily time frame, shows that where the stock has been within that whole entire day. So within that whole entire day, I see where the highs are. I can see where the lows are, right? I could see now I'm in a daily time frame. I could see the whole entire chart in the past, all the way for the past 1, 2, 3, 4, 5 months. Past 5 months, I know where the stock has been. And if I want to, I can make it a little bit bigger to maybe look at 6 months to a year. Usually the standard that people are going to look at are going to be around like 6 months to a year. I usually keep it around 6 months. You don't got to go much farther than 6 months, but it's great to know what type of play this is. So if I'm looking at this chart setup right here, I'm saying to myself, all right, RVLT. It's a play that's had a couple nice spikes, a couple big rips right here, but it's also a play that gives a lot back. This stock is known to spike, give it all back. Known to spike, give it all back. Known to spike, give it all back. Big time spike gives a lot back. And how do I know it gives a lot back? Because it has these big upper shadows right here. And these big upper shadows means it was up here at some point, but then spikes all the way back. So just me alone looking at this 6 month time frame, I'm already saying to myself, all right, if I buy in on RVLT, what do I want to do? I don't want to hold this stock very long. Why? Because I know it's going to fall at some point. And that's because I'm looking at past chart history. So looking at the past chart history pattern, I can see that this stock right here spikes and gives a lot back. And what happens in the past, as we talked about yesterday, is going to happen in the future, just like it did right here. Spike, gave it all back. 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 Spike, gave it all back, right? I always say that stocks, guys, a certain stock is going to be like a family. I always say, it's in your genes. It's your DNA, right? If grandpa RVLT right here spikes and give it all back, what do you think that, your dad is going to do? Spike and give it all back. And what do you think you're going to do? Spike and give it all back, right? If your grandpa has red hair and blue eyes, your dad probably has red hair and blue eyes. And if your mom has red hair and blue eyes and, they have you're probably going to have red hair and blue eyes. If your parents are super tall, you're going to be super tall. If your parents are, super athletic, you're probably going to be more on the athletic side, right? So it's the same exact concept when we're looking at stocks, and a daily chart is a great way to be able to understand what is this stock capable of. If we have never seen a stock spike in its past ever, if a stock has never spiked in its past ever, does that mean that's a stock you want to load up on and say, oh my gosh, this is going to be the biggest breakout ever? No, because just looking at its past, we could see it's never spiked. Why would we ever make that assumption? Or we see a stock that has spiked a million times in its past, goes on massive rips, massive runs, and then we load up on it and say, oh, well, its past chart history shows that, right? I talked about that analogy yesterday where we said, imagine if all the kids in your neighborhood come and they play a baseball game every Thursday, right? You got Martha and Stewart and Benny and, Rodriguez and all these people come and they play, baseball. And you have, a kid who has never hit a home run ever in your life. Little Stewart gets up to, the bat, right? Do you expect him to hit a home run? Well, no. Again, he's only 85 pounds. He struck out the last 17 times hitting a baseball, right? He only got on base once, and that's because he was hit, and his, mom complained that he never got on base. So, again, we put him on, second base to make him feel good, right? So, like, have we ever seen out of his past performance him ever hit a home run? No, right? So we probably wouldn't expect him to hit a home run at this time either, right? So understanding time frames, we're looking at the past, and each one of these candles, right? Each one of these candles shows us where the stock has gone and what the stock can do, and can help us understand, those future plays. Okay, so let's say we are looking at one of these candles right here, right? Let's stick with this green candle, right? Now, when we go into an intraday chart, we're diving inside this green candle to see what this green candle is actually doing. And that's when we go into our 5-minute chart. So let's just understand that right here, this 5-minute chart, this whole entire period of a day right here, from 7:22, from 9 in the morning all the way until 4 o'clock at night. What are we doing? We are basically just inside this candle right here. And as you can see, inside this candle, the stock opened up down here towards around 30 cents, ran up to a high around 44 cents. It came back on down, moved sideways for a bit, closed off right around this 39-cent mark, and it's currently sitting around 39 cents, in after hours yesterday. So RVLT, now we're in a different time frame. We're in the 5-minute time frame. And the 5-minute time frame is, again, giving us detail of this day. But we need to understand each one of these candles now represents what? 5 minutes. So at the start of the day, 9:30 to 9:35, nothing. 9:35 to 9:40, we had a nice spike. 9:40 to 9:45, the stock hit a low back towards its open, then again came up towards this area. Then again, more towards around 10 o'clock to 10:05, the stock started moving on up. 10:05 to 10:10, you could see, 10:10 to 10:15, we had a low right here, spiked all the way on up. And these time frames are just going to help us understand, throughout the whole entire day where our stocks have been. And the candles are going to break down where were the lows, where were the highs, and the real body of the open and close. If we know if it's green, it opened here, closed here. We know if it's red, it opened up high, closed down low. All right, so that's where we're getting right here. Now, the other point we need to understand is we need to be in the right time frame, because as I said, if you're on the wrong time frame, you're not going to be getting the same setups. You're not going to be getting the same patterns. So if we go back to what I started, we always want a daily chart and intraday chart. We always want to see the start of the day in the most possible detail. So we want the start of the day in the most possible detail. So if I'm looking at RVLT and it's after hours right now, it's 4 o'clock, 5 o'clock, 6 o'clock, whatever, right? I need to be in on RVLT in a 5-minute time frame so I could see where the stock has been at in the past, where went this morning, what happened over lunch hours, and how it closed off on the day yesterday. What if I'm in on a 1-minute time frame? You can see I'm in the 1-minute time frame. Doesn't this look completely different? If I'm in a 1-minute time frame, I'm saying to myself, all right, this is very dead in volume, right? All these dashed lines means no one really traded it, or it's only one order that whole entire period. So each one of these candles right here represent 1 minute. So if you have a dashed line, it only means one order went through. So we have dash, 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 dash. And we could say to ourselves, you know what? We could also say, hey, throughout the whole entire, day, we only had 39 cents as the high, right? 39 cents is the high. And it looks like 37 cents is the low, right? Because that's all we see. But we're only seeing to what period? We're only seeing to 2 o'clock. We're missing out on the whole entire morning. And if I'm saying, hey, 39 cents is the high and 37 cents is the low, now I'm saying to myself, oh, wow. If we break through 40 cents, we're going to have a new breakout because that's the high of the day, when we're really not. And why is that? Because we're in the wrong time frame. The high of the day is really all the way up towards around 44 cents. The low of the day is all the way back down towards around 32 cents. But if we're in the wrong time frame, we don't know that, right? Because we don't see that far back, right? So we're saying to ourselves, oh, wow, if it breaks through 40 cents, watch for the breakout. Oh, if it cracks through, 36 cents, that stock's going to dump, because that's all we see in the 1-minute time frame. But that only takes us back to 2 o'clock. We have to see the whole intraday. We always want to have the most detail, but we need to see where the stock currently is at to where the stock opened up at, so we actually have the pattern of the day. So how does this usually work? Usually at the start of the day, guys, you want to be in a 1-minute time frame. All right? At the start of the day, be on a 1-minute time frame. At 9:30, you're good to go till about 10:30. At 10:30, switch from a 1-minute to a 2-minute. Then at around 11 o'clock, 11:30, go to a 3-minute. And then around 2:30 in the afternoon, go to a 5-minute. I'm actually going to exit out of this presentation for a second to just show you guys, what I mean a little bit more. So let's take off, our pre-market right now, and we're fine. So CHMA, this was a very hot stock today. And what do we have here? CHMA, we're in a 1-minute time frame. Good. Right? We're good to go. We're in our 1-minute time frame. You can see from the start of the day to the current area where it's at right here, right? But a lot of times, guys, by the end of this afternoon, do you think I'm going to be able to see this area at 9:30? No, right? I'm not going to be able to see that area, right? This stock wasn't really hot yesterday, so I may be able to see it all. Nope, see, but imagine I go yesterday, right? Imagine I'm watching CHMA yesterday. I could see 4 o'clock, right, where the stock closed at 4 o'clock right here, but I can only see to what point? 150. I can't see anything before 150 unless I like scroll all the way back like this, and that doesn't get me a good understanding. So probably if this stock, if I'm looking back here yesterday, what do I want to do? I want to be in a 5-minute time frame. In a 5-minute time frame, I can see the whole entire day. I see the highs, I see the lows. I can go back, I see the highs, I see the lows. I can go back before that, see the highs, and I can see the lows, right? But in a 5-minute time frame right here, it's too cluttered, right? In a 5-minute time frame right here, if I'm looking at this day, the very hot day today, it's way too cluttered. There's too much going on right here. So what do I want to do? Space it out. And now I could see, U-shaped pattern, stock running up to $9, gets rejected, starts falling back on down. I could even put right here, I do have a little bit of a downtrend that's currently on, CHMA. I can put this down to our new support line right here, make it, very easy, very simple to be able to understand, hey, possible squeeze pattern, may get a little bit of a pop back on up, as the stock's getting tighter inside this triangle. Look what I'm seeing, which I couldn't see in a 5-minute time frame, because you were in the wrong time frame then. So right now you got to be in a 1-minute time frame. But this is my usual setup as well. I have CHMA 1-minute time frame until pretty soon. Once this starts crossing, right when the open starts crossing over, I got to switch over to a 2-minute time frame, right? And a 2-minute time frame is, again, I have all this room until it comes back on down. But right now I'm still okay. I'm still okay with a 1-minute time frame. But I have my CHMA 1-minute time frame, and then right next to it, I have my daily time frame. And basically, again, all the 1-minute time frame is doing right here. I'm going to get rid of this line for a moment. All the 1-minute time frame is doing is showing me what's happening inside this candle right here. But looking at CHMA, I can see, oh wow, CHMA, this is a big spike. We're usually never even above 820. We got all the way up towards around 930 today. Right around this 820 mark, we have a lot of resistance. Hits, falls, hits, falls, hits, falls. Hey, maybe around that 820 mark, we get back above it, might get able to get a little pop. I can also drag this out a little bit. I could see these are, some very tough areas. We're up to brand new 52-week highs, and I got all this information just from having a 1-minute time frame and a daily time frame side by side for me to understand, what's going on with these plays, right? So this is why, we want to understand what candlesticks are, and we want to understand our time frames. And just by, even if I'm not even looking at the 1-minute time frame, right? Not even if I'm looking at the 1-minute time frame, I can already see what has happened so far on CHMA. I know CHMA opened up right around 7:30. I know it spiked at one point all the way up to 925, and then it dumped, and it's currently sitting at 813, right? And because that's what the candle's showing me. So it means it spiked at one point, gave it all back, and now it's currently sitting around that 813 mark. All right, did that happen? Yes. It opened on up. It spiked at one point. It's currently sitting right around 812 right now. And that's, I'm able to see this whole entire, move all within one candle. And that's why we study these candles, right? That's why we want to make sure we're always on top of our game. And that's why we always want to be looking at these, right? So understanding our time frames, very, very important. So let's learn some nice setups, guys, right? Because sometimes when we have certain candles set themselves up in certain ways, it helps us understand where that stock's going to be going next. So far, again, a little bit of a briefing. What have we done? We've understand what candles are. Candlestick charts are used for traders to determine possible price movement based on past patterns. Candlesticks are useful as when they show us 4 different points, such as the open, the close, the high, and the low. Many algorithms are based on the same price information shown in candlestick charts, and trading is often dictated by emotion, which could be read in candlestick charts. And that's what we're going to be going into next. The emotion, and people see certain candlesticks, they say to themselves, oh, wow, this candlestick formed with this upper shadow and this lower shadow after it. It could make the play go in a certain direction. We learned what candlesticks are. We understand the 3 parts of each candlestick: the upper shadow, the real body, the lower shadow. That's a green day. We also have our red day, which is the upper shadow, the real body, the lower shadow, but it just switches the open and the close. We talked about our time frames, understanding what time frames we should be in, why we want to use the daily chart, and be in the right time frame throughout the whole entire day, which is 1 to the 2 to the 3 to the 5. We don't want to be in the wrong time frames because we could be missing out on certain patterns. And now let's move over to patterns that form from, again, different candlestick setups. So let's make sure that we are on top of this, guys. We have our hammer pattern, some bullish engulfing, the Morningstar, shooting star, the abandoned baby, dark cloud cover, and Doji Star. These are all very important patterns, very popular patterns. All right, these are all very popular patterns that I think you guys should know. All right, so what do we have? What should we focus on? Well, the first one we're going to be diving in, guys, is going to be this bullish engulfing pattern. Now, what is the bullish engulfing pattern, guys? So the bullish engulfing pattern is a 2-candle reversal pattern. The second candle completely engulfs the real body of the first one without regard to the length of the tail and shadows. The bullish engulfing pattern appears in a downtrend, is a combination of one dark candle followed by a larger hollow candle. On the second day of this pattern, the price opens lower than the previous low, yet buying pressure pushes the price up to a higher level than the previous high, accumulating in the obvious win for buyers. It is advisable to enter into a long position when the price moves higher than the high of the second end of the engulfing candle. In other words, when the downtrend reversal is confirmed. So it's easier, obviously, to see it than to go over everything. And I'm going to, hop on and jump out of the PowerPoint for a second and show you guys another example. But the bullish engulfing candle, guys, is when we have a downtrend. So you'd have red candle, red candle, red candle, red candle, and then a big candle like this engulfs. Imagine if we picked up this candle and just slid it sideways. It would cover up this whole entire candle. And that's when we start going back up to the positive side. All right, so let's go over this a little bit. I always just want to give you guys a couple different examples of these. Now, the thing is, we could have bullish engulfing candles, but we can also have what? Bearish engulfing candles. All right, so, a bullish engulfing candle would be, this would be a good example right here, where if we want to look at this, what do we have? We have our bullish engulfing, which is, down, 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 down. And we have our bullish engulfing, which is, again, basically consuming this whole entire one. Then we go up, 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 up. It's the same exact thing right here, guys. If we are going up, 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 and we have our bearish engulfing, which means it's basically a massive candle next to a little green candle, then we start going down, 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 down. You guys can see how this works? So if we have an uptrend, and we have a very small green candle, and then a massive red candle that's engulfing the whole entire candle, you're going to see a reversal. If we're seeing a whole entire downtrend with a little candle, and then the next day is a big green one, we're going to be getting our reversal. All right? So another example of this, where a lot of traders, another easy example would be something along this line, where we're falling, 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 right? We have this massive green candle that engulfs the whole entire candle. The stock starts moving back on up. But everything we do, guys, all right, everything we do, we can reverse it from bullish side to a bearish side. All right. So, a lot of these candles, anything that you can do to a bullish side, you can also do to a bearish side. So downtrend, 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 small bearish candle gets engulfed by a big green candle. That's going to be a trend reversal right there. Okay, so the bullish engulfing candle is a big green candle engulfing after that red downtrend. So you guys can see that, and you guys can be able to make some very nice profit. So I always want to make sure this is a very popular one that you guys can go ahead and make some money on. All right, what else can you guys look at? One of the most popular ones, guys, is going to be a Doji Star. All right, so what do we have here? A Doji Star. A Doji is a name for a session in which the candlestick or security has an open and close that are virtually equal and are often components in patterns. Doji candlesticks looks like a cross. It's inverted cross or a plus sign. Alone, doji are neutral patterns that also featured in a number of important patterns. A doji candlestick forms when a security opens or closes are virtually equal for the given time period and generally signals a reverse pattern. For technical analysis in Japanese, doji means blunder or mistake, referring to the rarity of having the open and close price to be exactly the same. All right, so as you guys can see from our picture right here, our picture is our candlestick, guys. And this is our candlestick. It basically looks like nothing. It looks like a cross. It looks like a plus sign. If the stock opens up at, a certain price, let's say $1, runs up to 110, falls down to 90 cents, closes back at $1. So the stock opened up at $1, sometime hit a high, hit a low, and then closed exactly where it opened. These are great reversal patterns, okay? So these are great reversal patterns. So if you see a stock falling, you see a Doji Star form, and then you see then you would see stock start moving back on up in the other direction. Just like if you see the stock rising, you see a Doji Star form, you'll see the stock falling in another direction, all right? So if you're rising, Doji Star starts forming, that means you're going to start going down. If you're falling, Doji Star forms, it means you're going to start going back on up, all right? So Doji Stars are, very important. Just like the last one, I don't mind showing you guys some more examples if you guys need them. And again, all we need is a Doji Star pattern. So what would a Doji Star pattern look like? Very simple. It would just be right here, and this is actually a picture I'm going to show you guys later on, where we're falling, Doji Star forms, we're rising. We're rising, Doji Star forms right here, we're falling. It's just a very easy indicator to know that we are going to be switching direction. All right, and when we see this Doji Star pattern form, we're going to say to ourselves, hey, right, it's probably time we want to get out or possibly get in if the stock is, on a downtrend. All right, what else do we have, guys? A hammer pattern. The hammer is a bullish reversal pattern, which signals that a stock is nearly bottom in its downtrend. The body of the candle is short with a long lower shadow, which is a sign of sellers, driving prices lower during the trading session, only to be followed by strong buying pressure to end the session on a higher close. Before we jump in on the bullish reversal action, however, we must confirm the upward trend by watching it closely for the next few days. The reversal must also be validated through the rise in the trading volume. So what do we have right here, guys? They call it the hammer pattern because what does it look like? It looks like a hammer, right? If we're looking right here, we have a long lower shadow, and then we have the little, body right here. So what does this stock show? That shows that the stock opened up right here, right? The stock opened up at this bottom line, this little vertical line right here. The stock fell all the way down, and then buyers came in and pushed the stock and closed at a high. So we opened up, we continued on this downtrend and started dumping, but buyers came and showed strength and pushed it all the way back on up. That means, again, if we have this long lower shadow, it means it fell all the way down, and if people are willing to push it all the way back on up, what does that show? It means buyers are definitely moving in. And if buyers are definitely moving in, what's going on? Well, then we should be able to see some sort of reversal. All right? So the long lower shadow right here shows that we were once at this point, but people pushed the stock all the way back on up to a new high, which led to this play continuing to climb, continue to rip, continue to get continue to get a nice play right here. So again, we have the hammer candlestick pattern, which is, obviously very, very nice. We can look at some more examples as I've been showing you guys as well. And what do we have right here? Downtrend, long lower shadow right here on this, candle, which shows buyers. And that's where that stock starts, changing direction. All right. So we could see this right here where the stock is continuing to, fall. The hammer with the long lower shadow shows that the stock's going to be, moving in a different direction. Very important just right there. Now, what's up next? The Morningstar, right? The Morningstar. And I'm actually going to come back to this one in 1 second because we're going to go over the shooting star. The shooting star, guys, is basically the opposite of the hammer. Notice what do we have right here? A long upper shadow. So they call this one a shooting star. This is almost just the opposite, where we had what? We had the downtrend and the long lower shadow where buyers came on in and pushed it on up. The shooting star is kind of the opposite. And you can see we even have like a shooting star right here where the stock is moving up. Buyers pushed it all the way on up, and then it came all the way back on down, and that changed reversals. And we have up. Buyers pushed that all the way back on up, and then it came all the way back on down, and that's where we have our reversal, right? You can also see right here at the bottom, look at our long lower shadow. Shows that the stock was down right here, And then buyers came back on in and pushed all the way back on up. Long upper shadow shows weakness because it shows where the stock was up at one point and then started falling on down. Long lower shadow shows that buyers, again, came back and pushed it all the way back on up from a very low point. So we'll be diving into that soon. The Morning Star. The Morning Star, guys, as this name indicates, the Morning Star is a sign of hope and a new beginning in a gloomy downtrend. The pattern consists of 3 candles, one short bodied candle called a doji or a spinning top between a preceding long black candle and a succeeding long white one. The color of the real body of the short candle can either be white or black, and there is no overlap between its body, and that is the black candle before. It shows that the selling pressure that was there the day before it was now subsiding. The third white candle overlaps with the body of the candle, and now we showed renewed buying pressure as the start of the bullish reversal, especially if confirmed by the higher lows, the higher volume. So what do we have right here, guys? The Morning Star. All right, and there's going to be something I'm going to be diving into, which is a lot of these candlestick patterns, guys, are going to have sort of the same setup, but have a different name. If we're going over the Morning Star, what does this look like to you? We're having a downtrend, a little tiny candle, and it starts moving back on up. It's almost the same thing as a doji, right? Downtrend, Doji Star starts moving back on up. Just because this doesn't have the exact price of the open and the close doesn't mean it's not going to work. They just, instead of calling it a doji, call it the Morning Star just because that's a little bit more towards it, right? It's the same exact concept. We have a downtrend and a very tight little candle. It usually shows some sort of reversal, all right? Now, you guys can see there are a few other candles. We have the Abandoned Baby, right? A rare reversal characterized by a gap following a doji, which is then followed by another gap in the opposite direction. The shadows on the doji must be completely gap below or above the shadows of the first and third day. So why do they call it the Abandoned Baby? Because everything's close, close, close. Gaps down, doji, gaps up. You're kind of leaving the Doji Star down there. But again, what's the thing we have to understand? It's just a Doji Star. Stock's falling, falling, falling. We see a Doji Star. It doesn't matter if it gaps up or if it opens up at the same price tomorrow. We know it's going to be moving on up, right? Dark cloud cover, a bearish reversal pattern that continues with the upward trend of the long white body. The next day opens at a new high, then closes below the midpoint of the body on the first day. Just a sign of a reversal. And a doji, again, we already have gone over before, which you guys are all set for. So I like to make this as easy and as simple as possible, guys, right? We don't need to go into, a lot of times, it gets crazy. There's like Abandoned Baby, dark cloud cover, all this crazy stuff, shooting star, morning star, hammer, bullish engulfing, bearish engulfing. Let's break this down and make this completely as easy as possible. So let's make this simple. Any Doji Star you see leads to a reversal. Long lower shadow leads to a bullish reversal, right? Long upper shadows are going to lead to a bearish reversal. Does that make sense? You see a Doji Star, it's going a different way than where it's coming. You see a lower shadow, watch for it to push to the upside the next few days. You see a long upper shadow, it's going to be going down. Long lower shadow leads to the stock going up. Long upper shadow leads to the stock going down, right? Doji Star, stock's falling, falling, falling. Doji Star forms, stock's moving up, up, up. Bearish, going bearish Doji Star, stock's going up, up, up. Bearish Doji Star, stock's going down, 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 right? Long lower shadows. Lower shadows, stock's going down, down, down. If the stock came all the way down at this point and then finished the day all the way back on up, obviously buyers are there, right? The stock dumped, right? The stock dumped, but people still pushed it back all the way up. People are pushing it back up for a reason. So what happens the next few days? We start seeing a lot of big time rippers and runners, right? We see a lot of big time buyers. So we have that long lower shadow, and then it comes all the way back on up, shows that it did hit a low, but people pushed it all the way back on up instead of giving it up on it. Same exact thing with long upper shadows. Every single time we have a long upper shadow, it shows weakness, right? We have a long upper shadow. What happens the next day? It falls, right? We have a long upper shadow. What happens? It falls. We have a long upper shadow. It falls. Upper shadow. It falls. Upper shadow. Next day it falls, right? Upper shadow. Next day it falls, right? Upper shadow. Next day it falls. Whoopsie. Right? Every single time. Upper shadow, next day's red. Upper shadow, next few days are red. Upper shadow, next 2 days are red. Upper shadow, next day is red. Upper shadow, next day is red. Upper shadow, next 2 days are red. So it's a very, simple, easy concept. You don't have to get too crazy into it, going over these crazy patterns. It's like, when you're saying to yourself, oh, what candlestick pattern are you looking for? Oh, I'm looking for, the Morningstar mixed with a hybrid of the abandoned baby. If it only crosses over with the hammer points of this, pivot point of that, this, what. And it's like, hey, we have some upper shadows, watch for weakness. We have lower shadows, watch for strength. We have Doji Stars, watch for the stock to do a reversal. The only thing other than that you really need to know of is going to be the bullish and bearish engulfing. Those work out great as well. All right. So I wanted to go over these candlesticks. I want to make sure that you guys understand them. Most importantly, understand different setups with them, and be able to understand the certain time frames that you guys are supposed to be using. So I wanted to clear that up, make sure that you guys have the understanding behind candlesticks, understanding the time frames and how we can see technical analysis and know our game plan just by looking at the candlesticks. And on top of these, some very important patterns. That's going to be wrapping up our day 6 of our boot camp lesson. And tomorrow we move on to day 7, which obviously is going to be absolutely great. Fired up, looking forward to that. And, right now, if you have any questions, comments, or concerns, please let me know. Awesome work today, team.